What's all this business about Goldbach levels?
Within 5 minutes, I'm going to teach you a market maker model ICT hack based off of Goldback that has never been seen before. Now, if you are unfamiliar with Goldback, then please click the video in the top right for my introduction to Goldback, because this stuff is very advanced and you will not have seen much info about it unless you spend a lot of time on my channel. So this is the US 100, which is essentially the NASDAQ. And as you know, all electronic markets in the US are priced using the Goldback algorithm. So let's have a look at this price action. You'll see that the high of NASDAQ, the all-time high, is 20,782. Now, if we go to the Goldback numbers, these are the special power of 3 numbers, you will see that after 19,683, the next Goldback number is 59,049. These are the power of 3 numbers, and these define the dealing ranges. So you'll see once we broke 19,000, which was at this point here, we would have had a dealing range expansion. Now click this video to learn more about dealing ranges and dealing range expansions. So once we broke that 19,000, the high of the dealing range would have been 59,049. It's crucial you know the power of 3 Goldback number that's running, because that helps you to easily trade the algorithm. So using this dealing range, you will see that price action is now within the breaker block level. Now, if you have knowledge of Goldback, you will know that the breaker block level is one of the bigger partitions. So you'll see the order block is quite small, the fair value gap is small, and the mitigation block is small, but the liquidity void and the breaker block are bigger partitions. With the bigger partitions, you can split them in half. These are called non-GB levels. Fractalizing this partition, you'll see something very interesting happened at equilibrium, the 50% mark. This is not random. This is because the algorithm bases all of its price movements on Goldback. So using the lower partition, we can now use a Goldback IPDA fib. We can now see the Goldback levels within these partitions. Screenshot this video if you would like access to these numbers. Or you can look at my community channel and there's a high screen resolution of this. This essentially tells you these levels define where the PDAs will form, the premium discount arrays. So it says the low of the dealing range is here, the high is here, this is equilibrium, the rejection block forms here, order block, fair value gap, liquidity void, breaker, mitigation, equilibrium, and then we do it in reverse all the way up to the bearish fair value gap, bearish order block, and the high. Now, market maker models love to run in Goldback dealing ranges. So you'll see we had an algorithm 1 running. If you would like to learn more about algorithm 1, click the video in the top right. But essentially, the algorithm 1 is the one that moves quickly on market maker models. And you'll see that in this order block level, this order block partition, we have a nice order block. So we have one big order block, but this is the order block partition. What did we do? We created the order block after running the lows. So we swept the lows into the low of the dealing range. We created this order block. As soon as we came out of this order block partition, we mitigated this order block. See this mitigation? And then we ran to equilibrium and to the high of the dealing range, completing the left-hand side of the market maker model. So what would have been the trade that you could have put on? Knowing what the algorithm does, as soon as we broke the order block level, you could have gone long. Stop at the low. Take profit, I would normally do it at the top of the order block level to be safe, because this is where the bearish order block starts, or you could have taken it off at the high of the dealing range. That would have been a nice 8R trade. And then it moved very quickly on the way down. And what level did it respect? The bullish order block level. Interestingly, it left a fair value gap. In the fair value gap partition, the fact that it didn't fill this fair value gap would have given you a heads up that it was going back up again. Okay, so we've gone back up into the high of the dealing range. Now zooming back out, do you now understand why we had this random dump in price to this exact level before it retreated up again? Unless you understand Goldback, price looks random. But once you understand fractalized partitions, non-GB levels, Algo 1, and market maker models, price action is no longer random. If you would like to learn more about Goldback, there's a link to Hoppy's book in the description to this video. And if you would like to learn my time and price golden bullet, which I use for Forex trading, index futures, gold, silver, copper, oil, and natural gas, and crypto, there's a link to my mentorship below.